right. Greed works.
Hello and welcome to episode 17 of Let's Play Wall Street Raider. I'm RakeM, your host. And before we get started, let's recap where we are with our commodities. We have bought silver at 14 and it's up. We've sold short corn and it's down. And we've bought gold and it's on its way up. So we did well in the last episode on our commodities, and we hope to continue to do that in this episode. Silver has been kind of capricious in that it's flirted with getting up to 20, and then it always turns around and heads back down. So I think instead of waiting for 25, we may go ahead if it starts to drop from this point, we will go ahead and cover it. Corn has kind of been doing the same thing, but in the opposite. It goes down to 6 and then it comes back up. So if it continues to drop, we'll wait for it to bottom out. But otherwise, if it goes up, we're going to go ahead and sell that. And gold, which has been below 1,000 for almost a year now, is finally on its way up now that the interest rate has dropped. And if the interest rate continues to drop, it should continue to go up. But nothing in this game is guaranteed, so you never know. So we'll just keep an eye on those as we play the game. But it's been a couple of days, so I needed a reminder, and I think we'll do that probably at the beginning of every episode, this little recap, so that we can keep an eye on our numbers. Alright, before we start dealing with stocks, I want to go ahead and change the speed on the ticker to 1. Okay, good. And the reason why is because we've got some emergencies that we have to deal with, and I don't want the ticker moving until we're done with those. And throughout the beginning of this episode, we're going to need to address any bankruptcies that come up. We're going to need to address those right away. And the reason why is because we have a bunch of companies now that have over 40% of their markets, over 40% of a market share in their industries. And we don't want any of those to become a monopoly. So, here in about 2, maybe 3 years, certain industries it'll be okay to have a monopoly, and the largest ones in the game, in the simulation, we're going to actually seek to establish a monopoly and hold it. But we're not ready for that just yet. The only one that's close is integrated oil. But it still needs about another year to grow big enough to where antitrust suits won't matter. And one of the things that we'll be doing with the interest rate, or the interest rate swaps, the income from those is going to be taking over that industry. If you've never taken over 100% of an industry before, just stay tuned, because probably in the next... I don't know, if we keep going at 2 months per, it's probably going to take another 10 episodes, but we'll get there. And I'll show you how to do it. And to do it and make a profit at the same time. Alright, but first, let's deal with our emergencies. The first one is 3Com. In the last episode, it sued Cisco and it lost. And as a result, it's got a major problem. Now, it's currently trading at twice its value, but its value is way down. So what we're going to want to do is one of two things. We're either going to sell this thing off and take the loss, or we're going to siphon off its assets to a new company, let TCOM go broke, and pursue the industry with the new company. So I want to take a look at the industry and see if we want to stick around, and based on these returns, the answer is yes, and these stock prices. So we just need a company that we can buy that's not too expensive. So let's find one. So let's go to General Database Search, and we want a company that is less than 100 million, has a stock price less than 95%, and there's none. How about 100? And we need one also that is publicly traded. Alright, so there's one. Devon Energy. So it's worth 65 and it's selling for 98. Alright, so let's get him. And we can have Arabian buy his assets because he's an integrated oil. Alright, so alright, 11% was public, and we have to buy the rest from the stockholders. And I'm just going to offer 30%. I don't care how big a markup I pay on 65 million. All right, let's try 40. All right, that they accepted. Now let's do the same thing with Citibank. Okay. Now, I paid a lot for him. Okay, but that's nothing compared to what we're going to make back. So don't let those high percentages, get you down. Now I'm going to give Devon Energy enough money to buy the majority of 3Com's assets, plus I'm going to have him buy enough new assets to give him a 10% share of the industry. TCOM has 2.5% and has roughly 7,500 in assets. So 10% would be 30,000. Right? So I'm going to give Devon $35 billion and have him buy 30 billion in assets. And that'll probably give him about an 8 to 9% share of the industry. Oh, first I got to have Arabian buy his assets. All right, so all right, that's that. Now that we have no assets, let's go ahead and buy back our bonds. Okay, now let's buy assets from TCOM. And I don't care if we lose our tax loss carryovers, that's fine. Okay, now TCOM has almost 8 billion. We're going to buy 7,500. Okay, and now we're going to buy new assets as well. So we've got 27. We'll buy 22.5. Okay, and we got a 7% tax credit on that as well. All right, so we have a 9.3% share, and we're earning 10%, and we're grossly incompetent, so we need to fix that. Okay, so what we're going to do is we're going to leave our growth rate at 0 until we reform the company, the management. We're going to set our R&D to 16, and we're going to go ahead and change managers right now. We're not going to wait and see if the 16% works. We're just going to go ahead and change the managers. Okay. These managers are used to integrated oil, and we need to get a new set of managers that know the network and telecom business. All right. So there we go. We need to split him. All right. Okay. Now he doesn't have a 50% market share anymore, I don't think. So we can't sue him, but the returns are still nice and healthy. We just have to reform our management and we can get up there with these guys. Alright, so now let's sell TCOM and take the loss. Okay, and let's contribute Devon to Swiss. Okay, that's that one out of the way. Now, next we need to deal with Siemens. Because I watched the last episode before I started doing, sat down to do this one. And I noticed something that I did in the last episode that I didn't think was very smart. And that was, I left his growth rate at 1%. What we want to do is we want to have Siemens grow at -10 and have Enzo grow at half of whatever that net 10% is. So -10% for Devon. Alright, so he's 41.2 times 10% is 4.12, and we want him to grow at whatever rate makes up half of this. So we're going to divide that by 2. Okay, and then divide that by the 6.5. So we want him to grow at 32%, roughly 30%, and that'll make up half the difference of his reduction. All right, so we're going to set Siemens to -10 and Enzo to 32. And the idea here is for Enzo's stock price to get up above 100, and then as soon as it's above 100, and I don't care how big it is as long as it's not a loss, we're going to have Siemens sell him. Because what's going to happen here in short order is Ericsson is going to go broke. Matsushita or whoever this is, I forget who that is, they're going to go broke. Sumitomo may go broke. And we just want to make sure that we don't end up with a monopoly. If Sumitomo goes broke, we're going to have a monopoly. If he goes broke and we're still growing, it's going to push us awful close. So, anyway, that's why I'm doing it. Okay, so we're going to get rid of Enzo as soon as we can make a profit off of him. Don't care how big it is, as long as we don't take a loss. Alright, so management, -10. Alright, Minolta. It's a bankruptcy. He's in office equipment. And do we care about office equipment? I know we don't have anything in there now, but there's transportation. Office equipment, here it is. It's only 54 billion. So, no, we don't care about it. Alright, so let's go to the bank and sell him. Alright, so back to Siemens. Okay, we're growing negative now. So let's go to Enzo. And I'm just going to make it 30% rather than 32. Alright, That's what we want. So he's going down a percentage point or two. He was like 41 point whatever earlier, and he's going up a percentage point, but it doesn't make up for the full difference. Okay? And the returns are fine. Returns are great, so we're going to run with that, and hopefully his price will go up. We can give him, if he's making money, we can give him a dividend too. That should help boost his stock price, but he's losing money, so we're gonna leave it the way it is at 0. Okay, that's Siemens out of the way. Now, the next one that we need to look at is ST Microelectronics, because his earnings are going down, and he's got too much of a market share. So we need to do the same thing here that we're doing with Siemens, except it's going to be real tough for us not to take a loss. So as long as we can break even, that's good enough. Alright, so he's already owned. Who can we get that's cheap? Probably Novellus. Alright, so let's see if anybody owns him. No. What percentage of the market does he have? Because if it's more than 1%, we can't do it really. Alright, minor factor. Alright, so we can buy him, transfer probably 20% of our assets, or in other words 10% of the market, so that we are at like 38%. Give them to Novellus and see if he can't run it up. He's got a positive. You know what? He's got a 12%. Let's give it to him. Does anybody own LSI? No. About the same price and size, but a better return. So let's do that. He's probably got better management. Alright, so who owns ST? Is it me? Yeah. Alright, so I'm going to buy LSI. Okay, and after we give him assets, he's not going to have a problem with his credit rating. So let's give him to ST. Okay. And now ST will contribute 20% of his assets. So 20% of this figure would be about 28,000. Okay. Now let's take a look. Alright, we undershot it a little bit. No, we didn't. We're on the second line now. Alright, so we got a 10% return, or 11% return roughly. Alright, so we want to have him continue to grow at -10. And 7% is probably good. Let's double check that. We're reasonably competent. Let's back that off to 6. And on LSI, we'll leave him at 1 and have him grow at 1%. Leave his dividend alone and see what happens. But basically, actually, we could probably sell him right now. He's at 106%. Alright, let's split first of all. $0.15 a share he's going to make. And he's up to 30. We gave him 28. We can probably just break even on that. Let's see. Yeah. I'm going to see if we can get him up to 62. 62 will break even for sure. All right, so what were we gonna do with them? Oh, we were going to make his growth rate 1%. And see if that gets his stock price up. All right, because we got to have some room. Got to have some room to grow and not become a monopoly. Okay, next one is Hormel, and it's the same situation. It's got too big a market share. Okay. Kraft we don't want because he's got super fun cleanup costs. So we just need to find a cheap company that we can give some of these assets to. Alright, so general, database, and there's one still, Rambus in semiconductor. Alright, 86 billion, or million, excuse me. Alright, so who owns Hormel? I know he's one of the insurance companies. Okay. Alright, so I'm going to buy Rambus. Okay, we can have ST or the new company that we just bought buy his assets. So let's have LSI do it. Okay. So Rambus is now an empty shell company, and we want to go over to Hormel. Let's see, Hormel. All right, we got 100 billion in assets and a whole bunch of cash. Man, did we have all that cash before? All right. Well, anyway, I want to contribute Rambus to Swiss over to Hormel, and Hormel to give assets to Rambus. So let's do that. Alright, Hormel is a 47% market share, and he's got 100 billion in assets. So let's do the math. 100 billion divided by 47, and then multiply that by 7, and that's what we need to give him, 15 billion. That seems low, but let's try it and see. So capital contribution, business assets, and 15 billion. Okay, now let's take a look at and see if we got it right. Yeah, pretty close. Okay, so now we need to dial in here, and we want Hormel to grow negative. Okay, and we want Rambus to grow positive, and we want it to be half as much as what Hormel is losing. Alright, so first of all, let's set Hormel to negative 10%. right, and now we want our new company, Rambus, we want it to grow at half of whatever percent it needs to make this difference up. All right, so 10% of 37.7 is 3.77 divided by 2, and then divide that by the 7%. So that's 27%. So we're going to set his growth rate to 27. His R&D to 9 is probably fine. And if he's going to be projected to make any money, we'll give him a dividend. All right, so he's projected to lose, so we'll hold off on the dividend. So let's split him. Okay, and we will set his growth rate to 27. All right. So he'll go into debt, but his stock price should take a nice hike up the ladder. And as soon as it does, we'll sell him off and then grow ourselves. Okay. All right. Next one up is Time Warner Cable. All right. He keeps incurring more debt without really giving us any payoff. And he's the market leader. All right, but he's just not doing anything. You know, he's just a waste of space. So I'm inclined to just sell him off and come back to this industry, you know, when there's a company worth owning. Because right now there isn't one. You know, we could spend some more time reforming him, but he's not that big in terms of our overall picture over here. So I'm going to lighten the load a little bit and just sell him off. Okay, and we will take a little bit of a loss on him, but, you know, it's not that big a deal. All right, and we'll apply that and pay down our loan, because we don't need him dragging down Time Warner. Time Warner is probably going to be ready to sell based on his stock price. So we don't need an albatross hanging on our neck. Okay, so let's check and see if Time Warner is ready to sell, because he's the next one to look at. And we've almost got 3-1, but AOL probably overpaid on this by a lot. Okay, and the stock price on Time Warner is more than 5-1. Okay, so we're going to just go ahead and sell it, take the profit. But before we do, I want to see if there's another company that we want to take and re-enter the industry with. And it looks like all the ones that are decently priced are already owned. Well, nope, here's one. All right, so let's see. Nobody owns him. All right, News Corporation. Okay, so we'll have AOL sell Time Warner. Wow, the stock price dropped $4 just in those 2 seconds. But we're still going to sell him. All right, and let's pay off our loan and everything. And let's just buy them all back for the 103. Okay, now let's buy 100% of News, whatever it's called, News Corporation. Okay, now let's see if it needs anything. Nope, debt's almost 3-1, so that's fine. And I don't think he needs to grow negative. He needs some more R&D to get his management up. Okay, so we need to freeze Time Warner's credit. And while we're at it, we'll freeze, who is this? McGraw-Hill. We'll freeze him too. And we will reform our management and raise our growth rate to 12%. Okay, so let's do that. Okay, and we'll set our R&D to 10. All right, Fred Meyer wants to merge with us, and we are saying no to all mergers at this point because we have too many companies. And there's a bunch of companies in that industry, supermarkets, that are going to go broke pretty quick, I think. So we're going to get them anyway without the merger, so why merge? All right, so growth 12. Okay, and we're earning money, so let's see about a dividend. Make it 95 cents. All right. Now AOL has a bunch of cash, and they're owned by me, so I don't want to do a extraordinary dividend yet, but we're going to take care of that in a few minutes. All right, so next up is Alcoa. Alcoa bought Southern Copper in the last episode, and we've got both of them growing negative because of how big their combined market share is. And I wanted to show you, I mentioned somewhere earlier, way early on in the series, about how if you have multiple companies in the same industry, it'll show you their combined market share, and here it is. Alcoa and affiliated companies have an aggregate market share of 50%. All right, so we are already technically a monopoly in this industry, so we need to have Alcoa sell some assets off. Okay, so we're going to do that now, and I just want to sell all but the 30,000. So we're going to sell 1173. And no, I don't want to sell to Southern Copper, so we've sold them to FINF, whoever that is. Okay, and now I want to do with the same thing with Southern Copper. I'm just going to round it down to 8,000. Okay. And Mitsubishi we needed to look at too, but we haven't got to him yet. He's next up. Alright, so there we go. Now our combined market share is 48%, and we still need to continue to grow negative until we can sell PCU off. Alright, JCPenney has filed against Sears. Alright, so basically, when this stock price gets up above 100%, we're going to go ahead and let him go, and then we'll change our growth rate back to a more normal growth rate, which at this point is probably going to be about 5%. All right? Okay, let's go look at Mitsubishi. Here he is. Alright, he's got too much debt, and he's been losing money and losing money and losing money and losing money, and I'm tired of him. We've set his R&D higher and higher and higher every time, and it's just not going anywhere. And he's just not that big. He's just not that big. This whole industry is not that big. And so I'm just going to let him go. Okay, I'm going to take the loss and just let him go. Alright, so that's that one out of the way. Next is Nippon. Okay, and he's finally getting up there in terms of his stock price. There's nothing that we need to do on this one. I just want to point out that we're in danger of catching these two, and these two are next up on the bankruptcy list. If we continue to grow at this rate, that'll drive them and their returns down. So I'm going to back this growth rate off to 10% and hope that they catch up and don't go broke. Because if either of them goes broke, we're going to have a monopoly. So we're going to grow a little slower and hope that they can, stop growing negative and start growing positive. All right, so just going to back that off a little bit. All right, next up is Dow. Okay, Dow has 40% and everyone else is growing negative, and the industry is at 3%. So this one actually looks good. We don't need to do anything else on this one. But because he had such a large market share, I wanted to come take a look. All right, last up is Browning Ferris. And this is another one, I don't know if there's anything that we actually need to do. His earnings are going way up. And he's got 36%, so let's take a look. Yeah, we're growing at 12, got a 9% here, and we're mediocre. But our earnings are going way, way up. So I want to increase this to 10% and see if we can't get our management to come around. Okay, that's all the emergencies. That's all the emergencies dealt with. Now, the next thing I want to do is I want to pare down our portfolio. We've got too many companies in it. And after picking up those other small ones, we're back up to 44 companies again. All right, so I want to look at the smallest companies we own and get rid of the ones that we can. All right, so the first one is Neiman Marcus, and it's a subsidiary of JCPenney. And the only reason why we kept it separate was so that he could file a separate antitrust suit against Sears. And with as small as he is, it just doesn't matter, and it's just too many. We got too many stocks, so we're going to go ahead and liquidate it now, and not worry about what happens with the antitrust on him. Okay, JCPenney just filed. We'll let him file and deal with it. All right, 3Com was the next smallest, but we already took care of him. All right, A&P is next. And he's only 32 or 3,800. Well, even lower than that. So it's been losing money, and I want to see what's going on. We finally got him up to reasonably competent, but the industry is still deteriorating. But there's a bunch of companies here that look like they're going to go broke. Because we've got interest rate swaps with some of these, and it's going to come up. So I guess that for right now, we'll hang on to him. Let's see how big this industry is here. Supermarkets here. So it's a good size. And they're good returns too, so we're going to hang on to them. And if any of these go broke, the rates will go up even further. So we're reasonably competent, right? We're making money now, so let's give them a dividend. Set it to 39. And let's increase the R&D by 1%. Okay, and the industry is growing at what? 1%? 4% long term, so let's make this 4%. And And ordinarily I would freeze some of these guys that are growing too fast. But I don't think I'm going to do that just yet. I'm going to wait for the interest rate swaps to kick in and see what happens to these guys. Alright, so that's that. Alright, next up is FEMSA. He's 4,000 or so. Oh, he's up to 6 now. Good, his stock price going up. Alright, so let's see. 207 next quarter, cool. So let's see what we got going on. Alright, he's at 206. Great return. It's just that everybody's growing too fast. Alright, let's see. He's running out of money. He's running out of money, but these other three aren't. So on this one, if we had a bigger market share, I would go ahead and freeze those, but they don't really affect us that much. I mean, they're growing this high and we still have a great return. So I just want to increase our growth rate to 7, get his stock price up, and then sell him. Okay, he's under, I got the wrong one selected. Okay, he's under Hartford, and he doesn't have a dividend, so let's give him one. 33 cents. Okay, next up, we already dealt with Mitsubishi, so next one is Goodrich. And I think we're going to keep Goodrich too, because he's a small company in a big pond. You know, he's small fish in a big pond. And we're going to want to grow him up to be a big fish in this pond, because there's a lot of money in this industry. We sold off Litton and we bought Goodrich because nobody else was, you know, decently priced. These returns are really good. So what I want to do with him is I want to give him some extra money and have him buy some new assets. In particular, 8.4% additional assets. So let's calculate how much that is. Litton has 26 point, well, he doesn't have 26.2 yet. He has 24.6. All right, so 130, 225 divided by 24.6. All right, and we need 8.4. All right, so multiply that times 8.4. That's 45 billion. And that'll give us about a 9% market share. All right, so let's go to Goodrich. And what was it, 45? All right, so I'm going to give him 50. And I'm giving him the extra percent so that he has working capital. Where is he? Here he is. Okay. Let's split him. All right. And now the working capital is going to go right here. That's where it goes. All right, so buy new assets, and yes, we'll go ahead and buy those. Thales, where is he? There he is. Okay, and now let's buy corporate assets. 45 billion. Okay, 7% tax credit. Now, the returns went down, but not that much. Okay, we're negative, but we got to turn our company around. We're very incompetent, and we have plenty of credit to do that. This money will disappear and go into working capital as soon as the computer or the simulation catches up. But we got plenty of credit. All right, so did we already change the management on this one? Doesn't look like it. Let's see. We're very incompetent, not grossly, right? All right, let's leave it then. Might change it to 16%. Growth rate's fine though. May need to freeze some of these. Give ourselves an extra leg up. I know he's not frozen, but I think maybe these others are. Right? We froze everybody except for Litton. So let's go to SunTrust and freeze him. Okay. That'll help us out. Let's change his R&D to 16. All right, next up is the brewery. All right, we got extra cash and everything, but his stock price is just dismal. And we've had him for a while now. All right, he's still mediocre after a year, and the industry is deteriorating. So we got to see what we can do. He's only 3.5%, but we got to see what we can do here. Nobody really is doing very well here, and it's growing negative. I'm thinking we're just going to let him go. Let them go and let them figure it out. I mean, breweries is supposed to be up here, supposed to be nice and big, but there's just too many players in the game, and the return has gone down. So I'm not liking what I'm seeing here. They're not quite. We just don't have a big enough market share. That's just all there is to it. We just don't have a big enough market share. And there's, all the ones that are reasonably priced are owned. So I'm just going to sell it, get it out of here. No reason to stick with a loser. All those returns were great before, and now they aren't. So. All right, all of our messing around and corn went back up. Gold is up, silver is up, and corn is up. So we're going to hope for the best. Let's move on. Enzo is next, which I think we already took care of, didn't we? Yeah, we took care of him. All right, Southern Copper we took care of. Nissan America is next up. All right, we're finally making money. We're very capable. We only have a 5% market share. And I just want to look and see if there's anything else that we can do to help ourselves in this industry. We could add Skoda. And we can freeze these two, Chrysler and Toyota. All right, so let's do all of that. All right, first let's freeze these two. All Alright, that's Toyota America, and the other one is Chrysler. Alright, so here's Chrysler and Toyota America. Not there. Does he not have a loan? Guess we're going to have to look. Yeah, he's got no loan. Okay. Who does he bank with? Mizuno? Alright. The only way to get someone's loan account when they have no loan is to buy their bank and merge them. Typically, the bank regulators won't let you buy a bank and merge with it and liquidate the bank. So what you have to do is you have to buy the bank that you want to merge with and then contribute that bank to your bank and then do a liquidation, because a regular merger doesn't work. The bank regulators put a stop to it pretty much all the time, but it'll allow it in a private liquidation. So let's see. You know, with the interest rate as high as it is, there's probably some well-priced banks out there, and Mizuno might be one of them. All right, here's Mizuno. Nope, I wouldn't call that well-priced. Look at that. We're the only one at the top of the heap here. Look how negative these are. There's a lot of banks going bankrupt. Wow. I don't think I've ever seen it this bad. Of course, you know, that's what 3 years of 12% will do to you. Wow. Okay, so I guess we're not going to be merging with any banks, because all the ones that are reasonably priced have NMF on them. They're all D credit rating. Look at that. D. Wow, that's crazy. Okay, so I guess we're just going to have to live with what Toyota's doing. Which is bad for us. But again, this isn't a very large industry. I mean, it's it's pretty small. It might have been big earlier, but they had so many bankruptcies that it's not that big anymore. That's why the returns are so good. Alright, so do I want to do a merger with him now? That's the question. He's mediocre and we are reasonably competent, right? Oh, we're very capable. I don't know, I think I just want to run this one up, get it to 51 or higher, probably 68. And then let it go and worry about the auto industry later. Auto industries, all three of them are pretty competitive, so it's hard to make a consistent profit over any period of time there. Alright, next to last is British American Tobacco. He's finally making a profit. Alright, so let's take a look. We got 17%. We're growing negative, and we don't need to. We are mediocre, though, so we need to up our R&D and change this to like -1. All right, and let's split him as well. I think the last merger that we did with Reynolds is what kind of stunted our growth with British American. So we're going to be a little bit more circumspect with mergers in the future. Because basically every time you merge a company with one of your own, it's like starting over. You have to reform it all over again because of all the turmoil that the merger creates. All right, so let's up our R&D. I'm just going to make it 9. Going to make our growth rate -1. And we're making money now, so we can talk about a dividend. All right, and the dividend will be 42. Okay. And last but not least is Union Camp. All right, Sumitomo just went broke. And he owns Sumitomo Electric. So we got to deal with this immediately. Okay. Let's go to Siemens. See, that's Sumitomo Electric. That's Sumitomo Tire and Rubber. And that's, I think it's American Stores. And he owns Alpha Beta Markets. Okay, this is all the ones in the supermarkets. All right, so let's go to Siemens first, because that's where we might actually have trouble. All right, so we got 39 plus 12, 13.1. That's a problem. We're above 50%. So we're going to sell whichever one we can make a profit on. That's this one. All right, now we only have to sell 6%. Oh hell, that's all. He's not very big. Let's sell all of them. It's not enough money to worry about. Let's just sell it off. Okay. Now, the fact that we got up above 50% is makes us a target for antitrust suits, but none of them have filed as of right now. So, because we sold that off before they filed, we should be okay. Now, it doesn't mean we will be; it just means we should be. I've had it happen where I got up above because of a bankruptcy. I got up above 50%. I sold off the company immediately, and that company immediately, the one that I sold, sued me for antitrust, and he won. So, if that happens, there's ways to get around it, and the way to get around it is to just buy the company that's suing you, because you can't sue yourself. But if you already own a monopoly, sometimes that's hard to do. You can still get around it. I'll show you how if it comes up. And if I haven't already, because I don't remember if I have already. Let's go look at those other companies that Sumitomo owns. And Sumitomo, if I remember right, the parent company was a bookstore. Yeah, he's in bookstores. Alright, so what else does he own? He owns American Stores. Alright, which is Alpha Beta, and we own A&P. Fred Meyer, which wanted to merge with us. And here's American Stores down here. The returns are decent, so I'm thinking we should just merge them all into A&P. We don't have to buy their stock because their stocks are all too high. We can just buy their assets. Alright, so let's do that. Alright, so starting with American Stores. That's $45 billion. I'm assuming he's the parent since this is so huge. Alright, so 45, call it 40, call it 50. All right, and next one is Fred Meyer, and he's 2600, 2610. All right, and that's us. So next one is Alpha Beta Markets, which is another 10,000. All right, so 12 billion, and we're gonna have to look and see what Meyer owns here. Oh, more supermarkets. More supermarkets. Holy cow. Alright, so 21.8, that's 36.9, 44, 45, 48.4. Oh crap, we're up above 50% again. Alright, he's huge, so if he doesn't own anything, let's sell him. Alright, who owns him? American Stores. Alright, so let's sell that right now. Alright. Who owns American Stores? Sumitomo, 32%. And we're underpriced. Let's go back to the industry. This is the one thing about bankruptcies that is such a pain, is that when the parent companies go bust, this can happen to you. Rather than worry about how all these are structured, let's just have A&P buy them all. Buy all the assets. A&P is 100% owned by the bank. We can worry about, what to do with these overpriced stocks, because they're trading at a pretty good premium. All right, let's do these two, and then we'll figure out what to do with those two. All right, so let's look at A&P and see what he's got to work with. Okay, so he's got enough to get AMS, because AMS is small. 45. Does AMS own 100%? No. Man. All right. Fred Meyer is only 2,600. This is going to turn him into a holding company, but that's fine. We can use more holding companies. All right, we don't have enough cash and credit to buy all of Fred Meyer's stuff, so let's go to the bank, have the bank contribute some money. Let's start with 10,000 and see if we need more after that. Okay, so A&P is going to buy corporate assets of AMS. Okay. We're going to buy corporate assets of Fred Meyer. Oh, not shares, assets. Okay. Alright, that's 2 down. Now, this one has 16 billion. And this one has 26. Alright, so 16 and 26, 42. So we need another 35, call it 40. Okay. All right, now our market share is 42%. We're growing at 4% and R&D at 10. And we're supposed to have a huge increase. That's why you want a large market share, folks. But you don't want to be a monopoly. What's our management? Mediocre? We're spending 10% on it. But these guys have cleaned up. So let's make it 12, 13. Let's make it 13. Let's drop our growth rate to 2 because we're big enough already. And we're supposed to make money, so let's do a dividend. But first let's do a split. Dividend will be 54 cents. Okay. All right. And we're not going to freeze anybody because we don't want to get a larger market share at this point until we've reformed our management and we can lower our R&D. Okay? All right, that's that one out of the way. Now, question is, what do we do with these? Okay, let's look at Sumitomo Rubber. He's the market leader, and he's 108%, and Sumitomo only owns a quarter of him. Well, he's not in great shape, but he's in okay shape. What's his management? Competent. And his earnings are up. Why is he ready to sell? Well, his dividend's too high for one. And the industry's growing negative. So he's paying out $1.78. He's bringing in $2.40. So as a result, his debt's going up. All right, let's get this under control. If we were to buy him, who would we want to own him? He's 23 billion with the potential for 80. Let's see. Swiss is worth $1 trillion, and Hartford 900. But I think he may have too many stocks already. That's 9, 10, 11. we going to keep PHMSA? That's the question. I guess we're only going to keep it till it is big enough, right? So, big enough to quadruple our money? Which will happen if we win this suit. Alright, let's do Hartford. He's got the money to buy him. So let's have Hartford buy Sumitomo Rubber. Okay, I guess we got to pay a premium on this one. Let's try 32. Wow, still inadequate? There we go. Alright, let's see what he needs. 11 billion, so we need to give him 2 billion. Well, he's got 2 billion. Let's buy back the bonds. And that gives us 2-1. We want to take this down to 7,500, right? Yeah. So give him another 2 billion. Our interest rate's gone back up. That's bad news, especially being that it's the end of September. Okay, silver is up and gold is up, but corn is also up. That corn's being awful stubborn. Alright, so what do we need to do to get his earnings up? He's mediocre, reasonably competent. So we need to drop the dividend down, make the R&D 6%. We don't need to grow negative, but we don't want to grow too big. Let's make it 3%. Okay, so 6, 3, and whatever the 1% of the net worth is, which is 25. Okay, let's see how that does. Well, we gave it enough to get this down to 7,500. Well, it's close enough. Let's go with that. So you have interest rate swaps or something? No futures. Let's go to A and P and do the same. Alright, who am I missing? I think it's this one. Alright, I think that's it. I don't think we've looked at News Corporation for swaps yet, but alright, so News Corporation and then Rambus. Rambus shouldn't have one. Okay. Alright, that's it. Here we go. Alright, so he's got 6% of a bank, which is probably going broke. Yep. So he needs to sell that. Okay, and now he's got 32% of a company that all it has is stock in another shell company, which has stock in 2 shell companies. And Albertsons owns Transamerica, which owns more stock, etc. Boy, this rabbit hole goes deep. Okay, so that's 44%, 45%. Alright, we've been going for over an hour now, and still got some more cleanup to do. We didn't turn on the ticker, but all this has got to be done, and the bankruptcies are just an unfortunate side effect of high interest rates and interest rate swaps. So we're going to end the episode here. Come back next time. Hopefully we'll get to turn on the ticker next time. Some of this cleanup will be done, hopefully in short order. We get all the emergencies out of the way, and when we come back next time, we're going to cull our stocks down to just 30 of them. 30 active stocks, and we're going to stockpile a few holding companies as we get ready to take over the integrated oil industry. So if you enjoyed the episode, please like and share. And until next time, have a good one.